Alright guys, let's start the class. It's almost 11 o'clock, so I'm not taking any trades right now. So let me just explain, before we start with the charts, let me just explain what you see down here on Reuters platform. So what you see, it's what you actually should care is just the news that you see on this section, and the heat map on this section, which you can see the volatility on Euro USD, right? So we had a couple of big moves, and you see every 30 minutes, what the volatility is. Usually I stop trading if I hit 180% or more on Euro USD. So that could show we're going to start a trend. And I don't want to be in it because it would be lots of chop chop. So market is it's going to be volatile, keep going up and down 10 to 20 pips at a time. So that's something that I look out. Try not to trade when I see anything over 180, which is here. So this color and above, I'll stop. Like it's good down here because we're almost about 120%. All right. We have a 30-minute snapshot, and we can go see the breakdown, then liquidity heat map, which, since 8 a.m., right, started to pick up. So started to pick up 8 a.m. and right at 8:45, I believe, we just, jumped up. And there's a little bit explanation about it that I'm gonna send you guys later on. And the next thing that I look at is just these bids and offers, bids and ask prices. The banks that I'm looking for are UBS, RBS, Citibank, and Barclay. So, this is something that you can only get by practice. You gotta look at the chart at this section and see how many times those banks are bidding the price up. So that's something that it seems kind of crazy for you at this point because you don't have an access to the time and sells, right? The only thing, there's a timestamp down here, but there is no volume attached to it. And let me see, I wanted to show you guys something else. Which, let me just take a picture. The other thing that I wanted to show you guys is this. Because of anonymity of banks, it only shows the bank number down here. This is a prime brokerage account, and what it shows, these are all limit orders, none last look. Yeah, the heat map updates every 30 minutes. Okay, so it shows each bank offering how much volume at the bid and at the offer. So let's say bank number 5 offer bids 1 million for execution, and bank number 13 matched the offer, right? So instead of bank number 5 coming up with the new offer, bank number 13 said, he's going to lower the price or higher their offer to match bank number 5 offers. There will be time that you're going to see one bank. Let me see if I can find an example here. You're going to see a bank that joins bids and offers at the same time. There's no example here. But let me see if I can find an example so I can take a screenshot at it. Yep, found one right here. Bank number 9. Oh yeah, bank number 10 too. So, but I found this example. We are way below the current bid and ask, right? By about, 0.8 pips, something like that. So this is another thing that you have to get used to it, right? But on this platform, they don't calculate how much volume is available within the 5 pip range, right? This is something that my software does. So, but what you actually look for to see, if you can find, because these things happen so fast, right? In the beginning, you're gonna say it's almost impossible, but once your eyes gets used to it, you're gonna see that if a bank comes up with their own bids and offers, right? Basically what they want is they want the total liquidity of that price, right? So if we hit 56.20 on pound USD, right, most likely this is going to jump up by 2-3 pips because that's what they're actually looking for. So just before you hit 20, right, this is 21, 201, and this is 208, so about 0.7 pips. So, but you guys don't have access to this type of information right now. So hopefully once the software gets ready, you may be able to get that access to this type of information. So these are basically what you're looking for, right? There's a 5 million available, and on the software it can tell you at this price totally each bank how many times they bid it at this price, and it will take a look at the execution to see if the actual 5 million right here was filled, right? The only problem is, since you only have the bank number, you don't know who it is, because if I could see this is UBS, right? If you guys could see, I can see it, but you can't. If you could see that this is UBS or Reuters, like let's say this was Euro USD, right? This was EU. So um, let's just say for the sake of this example, this was EU, and you'll see on the bids, right? All the banks, whenever price, like if they offered this price, like let's say maybe another bank offers another 10 million, 20 million, 40 million. So you have to add all these things up to be able to come up with a number. So usually if it goes above, like let's say 100 million, and on the execution, as I said, on the execution, the only thing that you're going to see is bank number 9, right? You're not going to see if it's UBS or Reuters. And as I was saying, if you could see Reuters going for 100 million, because what happens is on Euro USD, Reuters uh, owns, I think, more than 80% of the transactions on Euro USD, right? So many people, they have like brokers and LPs, they have different claims, but I know for the fact that Reuters, they execute, I think, close to 190 to 200 yards a day. So that means 100 billion, 180 billion to 200 billion a day on execution, Euro USD only. So basically, they own like more than 80% of the execution. And when I see Reuters executing these type of trades, I just follow them. I don't care who else is doing what, right? But these are the limits. I just have to confirm it on the execution, like time and cells. And as I said again, for anonymity, we have to, like most brokers even, what they do is they change the name of these banks, right? Because they don't want to know who's bidding at what price and who's matching it or who joins them, right? These are the type of information that if you learn how to use, it could make a big impact in your bottom line trading. And most people, they may ask me that if big banks, they're going for 10 to 20 pips targets, which they're not. They're usually in the market for tiny bit of piece of the price, right? So they want to get in at 01, get out at 06, make half a pip profit, right? Especially since they're liquidity providers, they have the tightest spread ever, right? Like what they give me, like let's say if they give me 0.2, they have 0.1. They're making the market, like all of them combined, right? That's why it's so hard to figure out, which side the market is gonna head. Yeah, I wanted to go short around 98, but it is what it is. I told people, I think Jeremy went short. I just hesitated for a second. All right, sounds good. So, but so let's just get back for a second. When the software is ready, the only thing that you're going to be able to see is something like this: which bank, bidding, or the ask price, volume, just the bank number, right? I will let you guys know the name of the liquidity provider and the number that we assigned to it, right? But for privacy purposes and legal issues, we're not able to do that later on. So I don't know how to, like, I'm not a teacher, so I don't know how to exactly teach you the level 2. Just trying my best, putting my thoughts together so I could show you basically how it works, right? Because as I said, in FX is totally different than future markets or any other market. Uh, in FX, what you do, you actually, when you want to buy, you buy at this price and you sell at this price. But what happens really is when you're buying at this price, banks are selling in this column, right? And they're buying on this column. So you have to figure it out from the market maker perspective, right? So market maker, they want to go long, right? They want the price to go up, so they're bidding here, selling it to you, right? And if they want the price to go down, they join this side of the market. So when you think about it, 97% of us lose money, right? And that's exactly because of this picture right here. Now you tell me that I'm wrong. So again, as I said, I may be able to trade and make money, but I'm not a good teacher. On the other hand, like, I'm not going to be one of those sales people that you see online that they always want to teach you something. They have seminars, but once you go to the seminar, they don't teach you nothing, but they keep talking about their system and how their system makes money. And at the end of the day, they haven't actually taught you anything, but what they told you is, if you would have bought here and sold here because of their system, you would have made money. Um, Anyways, so let's go back to the chart, talking about bids and offers and how bids and offers works and how you can put it to work in your own trading, right? So, and actually at the end of this webinar, I'll teach you guys a strategy, like for those people that they're new, that I used to like trade this strategy myself and make money with it. So, but that was like a couple of years ago. I don't know if it still works. You can give it a try yourself and be the judge. All right. So, a couple of times a day, I'll talk about bids and offers. I'll say, where are the bids? Where are the offers that I see, right? Talking about the volumes that I see in the market. So don't make a mistake, guys. I'm not talking about this. I'm not talking about this picture. I'm talking about the order executions, right? And where I see the big volume is actually accumulating on top of each other. So basically what I see is this. Like how much bids and offer are actually inside these boxes, right? And who's in charge? Buyers or sellers? So alright, so for the sake of this example, let's just say, let me see if I can color code them. Like let's say these are offers, right? And these are, like let's say, our bids. So the red ones are offers and blue ones, let's just consider it as bids. Or let me just move, put this one as bid, for example. Okay, so what you can expect, once a day I send out the bids and offers that I see in the market, and these are the major bids and offers. It works like, how should I put it, like pivot points, right? Or Fibonacci numbers. So you draw all these things on your chart. For what reason? The reason that you write these things in on your chart is to be able to see what is the probability, like you calculated before, the actual probability that if price hits my pivot point, it's going to move up by 10 pips, right? And then you start drawing your pivot points day after day once you have those probabilities. These are exactly like the same idea, but I find it kind of more powerful sometimes, right? So what happens is, once a day I give out bids and offers, right? So what you can expect, that does not mean, guys, because these are bids and offers, the major ones, right? So they may work a couple of times a day, they may not even work, it depends. So what happens is, like let's say we say offers at 11:05, right? So what you can expect is that liquidity providers are thinking to go short as soon as we reach these numbers, right? So one of the things that you have to keep in mind and take into consideration when you're putting your stops or targets is, usually on these levels we either hit the level and either break through it by 5, 6, 7 pips, right? Max 10 pips, and then go the other direction. And the reason is, there are big volumes being executed at these prices. So those big volumes, they're not going to get filled at the exact same price, right? There will be a slippage. Why I say slippage? Because take a look at this picture now. This is not the total volume of the market, right? These are just a couple of liquidity providers. Like let's say let me actually take a screenshot of Euro USD so I would be able to tell you what's going on. So, this is not Euro USD again. So let's just imagine these were order execution, not limits, right? Uh, let's just think for a second that whatever you see here are getting executed and not limit orders, because limit orders, I can pull the trade, have fake orders, whole bunch of other things. But for the sake of this example, let's just say we're at 50 right now. They're looking to go long at 49, right? So 49.6, we only have 1.5 million available, right? On the sell side. So like if someone wants to go short at 150, there's only 1.5 million available. So what's going to happen if you want to go short all of a sudden 50 million? Does anybody know? So let's just say if I go short right now 50 million here, what will happen? Exactly. Exactly. So in order, if I go short 50 million, that means I click on this side, I'm going to get a slippage. So they're not able to fill my order, right? At 96. So I want 96 to go short, right? It's not going to happen. It's going to move the market. So that means I'm going to get these numbers: 97, 98, 99, 0. We have good volume here on the 0, right? Then I get 01, 02, 03, and maybe by 05 I get filled. So I'm gonna have like maybe 0.5 slippage. Exactly, there you go. So sometimes if I do that, what's gonna happen is it might scare some people off, right? And they're gonna pull their orders. So then, like let's say these banks at 02, they may all pull their orders before I hit them. So what I'm gonna, be able to get is I'm gonna jump 02, then I get filled on 03. So it's gonna create slippage. So for this reason, like let's say I wanted to go short 50 million at 1105, what will happen is it's gonna push the price up. Right? It's going to push the price up, and since people thinking that the price is going to go up, they think it's going to be a breakout, right? But when that actually $50 million kicks in, other people are going to join them. But they're going to be smart about it. They're not going to go 50 million again. They're putting like small chunks of it, step by step. So, and that's when you're going to see a move in the market. in the opposite direction. So let me find a good example if I can. So basically what happens is we have offers at this prices. Sometimes what I do is I place my orders exactly on these prices, right? And put my stop 10 pips on the opposite direction. So if it's offer, I put my short limit orders and then put my stop 10 pips above it, and I go 10, 20, 30, and 40 pips in targets. So I cut my trade in 4 different portions. Same thing on the bids. So, you guys can be the judge. Do you know like how many times we placed like I called bids and ask bids and offers? So like you can be the judge and tell me how many times price exactly hit those levels, right? And just went the exact opposite direction. Like today we had 0920. Look at this. 0920 is right here. Bids at 0920. That's 19, that's 20. We missed it by half a pip or maybe even less, right? And look where the price is right now. So it's not even like, this 0920. We had many more instances that the market reacted exactly to those, bids and offers, right? And what happens is, guys, don't think that if we have bids, you have to exactly get in at 0920, right? Because for the same reason as I told you again, they're not going to fill the whole thing at that exact price. So, they're thinking about executing trades more cost effective, right? So they may start from 23 up until 15 to fill the whole thing, right? And keep their hands hidden from others. It's like poker. So you don't want your opponent to know what type of cards you're holding, right? So maybe sometimes what happens with these banks when you see big orders, that doesn't mean they wanna go long, or they're thinking that the market is gonna go up. They receive a rush of order from another company, like let's say Apple. They want to buy US dollar or they want to sell their US dollar. Um, Stuff like this. And, there's no news in the market. All of a sudden you see a big jump of 20 pips in the market. And that's when this move was caused by, someone trying to load on their dollar or sell their dollar. And what you see most of the times, like take a look at this one, this big move. All of a sudden, right after, it drops, right? Because people, they notice this, they keep pushing the price up, and at some point, they think, this thing is not going to go up anymore, and they start taking profits, right? That's when you see these small drops, like good for 10 pips scalps in the market. Then it's going to start continuing the same direction again, like these, right? But you don't know how far it's going to go up. It depends on how much volume they executed and what other people thought of this volume that came into the market. Sometimes, they could totally ignore it. Let me see, because I've seen something a couple of days ago that totally got ignored. It was one of those big moves. Yeah, this one, right? So this is when you're going to see these type of patterns over and over again. And one of the main reasons for these patterns are, someone had a big order trying to sell it, or they got the fixing, right? It's the time that they talk about the fixing of the FX. You see this big down move, people realize it, it was a flukes, and right back up. So knowing these type of flows, right? Because you can never guess. If you're looking at the charts, trust me, you can never guess this. Let me bring it down here. How could you have guessed that on the next 10-minute candle, you're going to go right back up to 1100? No way in hell. Unless you're using probability or using some type of statistics, right? I'm not talking about the rest of the move, so I'm not talking about knowing what's going to happen here. I'm talking about this exact candle and why it moves up, right? So it doesn't matter how many times I explain this to you guys, until you practice it yourself and you get your hands on the feed, you don't know what I'm talking about, because it's then that you're going to start seeing the order executions. You're seeing the limit orders, right? Trying to figure out who's trying to fool another person, right? Because this trading on level 2, especially in any market, it's like you're sitting at a conference table with a bunch of sharks, and they're waiting for someone to fall asleep so everybody else they can jump on him and rip him into pieces. Well, exactly, Lewis. It could be confusing for you, because this is, I think, the second or third time I'm explaining these things. But once you get the hang of the concept, you'll see how easy it is to make money. Like, it would be very easy uh, to make money. Like, if you cannot make money with these bids and offers that I'm giving you, right? That doesn't mean that, again, you have to go short on these red lines or buy on the blue lines, right? This can show you if you have, like, let's say you have your own system, trading your own system, and you come up to these numbers, and like, let's say you have a short trade at this number, right? And then you say, hey, wait a second, there are lots of bids at this price, right? So most likely the price is going to go up, so why should I go short? No, no, Shiva, there is no way that you can guess these levels by price action, right? This is, I hate to say this, but all these price actions, like basically charts, right? Or look at MT4. It's just built by these financial institutions for you to lose money over the long run. I don't know if you agree with me or not. Like, I really don't care, but I'm just giving you the type of information that I have, since I've been there in the market. And you're gonna face so many people that they claim to be gurus and stuff in the market. I'm not having those type of claims, but from my experience, I know for the fact that when there are bids in the market and you're trying to guess with price action where those bids and offers are, right? Um, it's hard. I'm just telling you it's hard. It's like, you want to drive, I gave this example before. Price action is trying to look in the past. Like, some people, they say, nothing works like price action. I don't know what to tell these people. But to me, any type of technical analysis, right? Technical, because you're using charts, and like let's say you're waiting for this candle to close above this line, then you can go long, right? But basically what you're trying to do is you're waiting 15 minutes to see what happened in the past and find a pattern, right, that it's going to repeat itself by a probability of, let's say, 80, right? So it's like using even price action, since you don't know those bids and offers and the volume. It's just a guessing game, right? Obviously, you may be able to draw lines on your chart that price is going to stall on those lines maybe 80% of times, and that's where statistic comes in, right? So as long as you have an edge 51% and above, you should be able to make money. But I still don't know why some people they can make money. It's this simple. You don't even need charts. You don't even need bids and offer volumes. You don't even need level 2. All you need is a coin, toss it, comes heads, buy, tail, sell, money management. That's it. You should be able to make money. Just telling you this much. If you can make money, trust me, there's something wrong here. Lack of patience, no discipline. So I don't care if you don't have patience and discipline. I don't care what type of system I give you, you're still going to kill yourself. So again, as I said, if you don't have bids and offers trying to guess the market, it's like, you're driving your car, looking at the rear view mirror, right? Looking behind you to be able to drive your car forward, to be able to guess, where the next street is going to come up. Like you want to turn either right or left, but if you cannot look through the windshield right in front of your car, there is no way that you can move the car forward. So, trading patterns and stuff, Fibonacci's, moving averages, even price action, to me, it's like you're still looking, backwards to be able to guess where the next street is going to come up so you can turn. You may get lucky with practice because you practice and you've been on this road many times that now you have the ability to just even close your eyes and drive on that street, right? But guess what? How many times you're going to crash your car to be able to get to that experience? Okay, anybody has any questions? Yeah, okay, what's your question? Oh, and by the way, before I answer your question, so these are bids and offers that are posted once a day, right? And as you guys know this, when we trade, most of the times I'm not going to say anything. I'm not going to say, if I went short when we hit, this offer, right? Sometimes I'm going to say I'm going to go short as soon as we hit 1105, right? That means I've seen more offers accumulating at that level, which is now it's strong enough for me to think that the market is going to go down. And you guys have the experience, like how many times we went long or short and the price didn't even go against us, right? So this is like, if someone tells you these type of signals in the future, and you will see that as soon as that person calls it, 20 or 30% of his trades goes exactly towards the target without going negative first, then you'll know he has a type of system that uses bids and offers. Um, Matt, no, they don't expire. These bids and offers that I tell you once a day, they don't expire. They tend to keep their liquidity for the rest of the day, because they want to keep going long and short on those levels, right? So it's going to last for at least a day. Sometimes, I've seen it to last for 2, 3 days. So they don't expire. But if I don't say I'm going to go short on those numbers, uh, that means, it still stands, right? But when I talk about it, it's different. That means, like, let's say initially when I call those bids and offers, I see anything between, like, 50 million to 100 million been executed on those levels. And what happens is, when I call it, I'll see something above 150 million. That's why I think, it's going to go down, because you just have to follow the smart money, not the dumb money. Since because we're using so much data right now, Sadiq, we're using so much data right now. I only track them for a day or two, because over anything over these day or two, the data gets so huge that it's gonna crash my software. So I usually look at this implied volatility on Reuters platform, thinking of saving the data in the database so I can have my own uh, heat map, right, with all the price levels and stuff that's been executed. So the next day I can uh, treat them as support and resistance. Michael, these bids and offer prices, I get it from my prime broker. Uh, I have a feed through a couple of prime brokers and hedge funds that I get a chance to see the flow. The time and sells, as I said, what you see here is not much of a use, but you can see a bigger picture, by seeing, the big boys, trying to bid it up, or crash it. So something like pump and dump strategy in the stock market. But since Reuters doesn't give me an access to the actual volume executed, I have my own feed that I get it from another source. So that's how I get my information. You're welcome, Louis. My pleasure. Hukam, I'll teach you bids and offers again one more time. Um, yeah, I can see all other pairs, Louis, but the problem is, since as I told you, like, some liquidity providers, they own a big portion of the market. So, like, let's say pound USD, I don't know which source owns more than 80%, right? Like, I know pound yen, I have a source that, controls 80% of the executions. So, I can count on what I see on pound yen, but pound USD and others, not much. Like I have the feed for all of them, but it's not going to be as reliable as others since they own that, part of market share. The platform that you see right now is Thomson Reuters. As I said before, if anybody wants, it's $2,500 a month. Yeah, give me 5 minutes, guys. I'll be right back. And I answer the rest of the questions. Okay guys, I'm back. Alright, so does anybody has any question? I want to close the room. Not close the room, just the webinar. And we'll stay put for trades. Well, yes, Jeremy, I said, I see other currencies, but not as reliable as your USD because, they don't own market share on those currencies. Yes, I do, Lewis. Send them this way. Okay, Michael. SL and TPs. All right, so here's another way that we trade. We have time trades. That means, I see a range, like all of a sudden during the day, we could have a range. Like, let me delete these. So during the day, I may find a range. Like today, I found the range 98, and I think it was 12 or 13 or something like that, 13. So I found this range that there were lots of offers in this area mixed with bids. So what I told everyone, I think everyone can agree with me if you were in the room, that I said if within the next 15 minutes we stay above 98 and we don't breach it, like if it goes below 98, trade is dismissed because now I don't know who's in charge, right? So I said if we stay above 98 by, like, let's say 12 o'clock Eastern time and below like 14, I go short at market. That means any price right at 12 o'clock, at any price within this range, I'll go short. So what I do for my stop all the time is I put my stop 10 pip above where I enter, and my target, first target would be 10, second target would be 20, third target is 30, and fourth target is 40, right? Sometimes I'll change the last target. Instead of like 40, I change it to maybe 100 pips or 150, 200. It depends on the market condition. But the only way I think that you can make money in FX is you got to give it some time. You got to be able to catch the trend in the beginning, right? Like, I think you guys can agree with me. Trend is not your friend. Like, show me one person who was actually able to find a trend and make profit out of it. So I'm gonna explain the bids and offers. Actually, Hukam, I'm not gonna explain it. You can check the recording in about an hour. I'll put it on YouTube. Alright guys, I'll talk to you guys soon. So if there's any trade, I'll keep you guys posted.